Hi, I'm Andrew Hare from Hales Douglas. In part 3 of our series on buying a business, I want to look at the due diligence process and some of the things that you're going to need to look out for as you work your way through it. Firstly, you're going to want to identify exactly what you're buying. Are you buying a business, or are you buying the structure, the company that the business sits within? That's important for legal and for tax reasons, so we need to pay some attention to that. You'll need to identify exactly what assets you're buying as part of the sale. You'll need a detailed list of any plant and equipment and rego numbers, serial numbers, that sort of thing, just so that you can clearly identify exactly what you're getting. You'll need to identify what else is included in the sale. Other assets that might normally be included in the purchase of a business are things like the goodwill of the business and trading stock. So all of those things need to be identified. One thing that you certainly need to do before you get to the contract for the purchase of the business is to apportion the purchase price between each of the items that is included, as that's important certainly from a tax point of view, to identify the values attached to each asset and each type of asset. So you'll need to do that and negotiate that as part of the actual purchase price. Because the sale contract is such an important document, you obviously need a lawyer involved in that process, but you also need to talk to us just to make sure that you understand the apportionment of assets in the contract and how that will affect your tax position going forward. Next, we want to talk about the sort of information that you're going to need as you work through the due diligence process. Normally, we would ask for a minimum of 3 years financial information from the vendor of the business, so that we can get a feel for its financial performance. If the current year's information is not available, we'll need some BAS statements so that we can make sure that the current performance is on par with previous trading. You're going to want details of the lease if there's a business premise involved, to know what the terms are, and so you can negotiate that going forward. You'll also want to get details of any important contracts that the business holds, so that you understand the legal and contractual framework that the business operates in. You'll need to know what the employee situation is, how many is there, what awards are they employed under, what entitlements have they accrued, things that will be important going forward. So that's just a few of the things that you're going to consider in the due diligence process. As you can see, that's a fairly complicated and maybe a daunting task. So just give us a call and we can work our way through all of those issues.